Alright, what is going on, everybody? This is the first of obviously many videos, but in this series I'm going to upload three. It is going to be ICT terms, what we look for, and basic market structure and whatnot to kind of help you guys out, the beginners, kind of learn what I look for, and just certain things to help you kind of build your experience in the market. So obviously, first we're going to go over some terms that ICT uses a lot that you'll hear in his videos, on his Twitter, whatever. So first we have accumulation. Accumulation is smart money buying at or near swing low in order to enter long positions or cover short positions. So if you ever see, when the market seems to not really move anywhere, when it's at a significant higher low, it's more of just kind of barcoding back and forth. It's accumulating those orders to then run onto them, to be able to sweep below and then come up, or to be able to come up and then sweep back below. So from there we have Asian kill zone. That's pretty straightforward. It's 8 a.m. to 12 p.m. Then we have Asian range, which is 9 a.m. to 2 p.m. Asian session, which is 9 a.m. to 7 p.m. So there's three different sessions. We have the Asian session, London session, and then the New York session. And there's obviously smaller ones kind of within those, but those are the gist of the bigger ones. And then we have bias, and obviously bias is kind of your directional output on where you want to see the market go, whether that's up or down, bullish or bearish. And then we have buy program, which is a trending market profile in which the directional bias is up, which is bullish, and trades in the direction of the trend are long, which is buy. So buy program, you would see where we keep going up and up and up, and it'll come down into a fair value gap and go up, and come down to a fair value gap or an order block and go up, and just kind of continue that. Confluence is an occurrence of two or more significant technical levels. Pivot, I don't use pivots. That's just the textbook definition. So for me, confluence would be if we hit an order block and a fair value gap, or if we hit a breaker and a fair value gap and then continue. Day trade, that is a trade in which the entry and exits are expected to occur within the same day. Don't disregard this profit. I just put that there for whatever reason. But yeah, so day trade is within the same day. Sometimes I do swing options. Highly unlikely. I don't like to do it, especially with everything that's going on. So usually we stick to day trading. Demo is what I would want you guys to start on first, to kind of get a feel for the market, get a feel for buying orders, placing orders, selling. So you're not just risking real money right off the bat, not knowing what you're doing. So demo is a practice platform, practice account, practice trade. Webull offers paper trading. TradingView offers paper trading. Both very, very good to kind of get a good feel for the market. Next we have distribution. That is smart money selling at or near a swing high in order to enter short positions or liquidate long positions. So you would see that more of on the fact of you have a swing high in the market. It would then sweep that swing high and then come back down, and that's where smart money would enter. So you would see consolidation and then a sweep and then a come back down. So they would sweep out all of those sell stop orders, and then that's when their buy orders would take and then come back down. So now we have drawdown. Drawdown is a measure of depletion due to accumulation losses. Drawdown, in dumbed down aspects, is how much in the red you are. So if you place a long position, a call, whatever, and you are negative, that is how much drawdown you are currently in. Dumb money, street money. He says that sometimes, usually he refers to retail. Now we have EST. Everyone should know what that is. That's Eastern Standard Time. Next we have fair value. Fair value is the median price in previous high to low range. And that could be with anything. As long as there is a gap where price hasn't overlapped, it is considered fair value. Next we have fib. Fib is a tool that we like to use for retracements, to map out levels, to map out consequent encroachment, to map out where projections are going. So you'll see kind of how I use those, how ICT uses those in later videos. Next we have higher time frame. Higher time frame is usually anything above the 1 hour, so the 1 hour, 4 hour, daily, weekly, monthly, etc. HL is high or low, and then the H-L is high low. ICT, obviously, inner circle trader. Indicator. Indicator is a basically, keep it in a short and simple terms, on TradingView, you can set up indicators on your chart to kind of help you map out things that you don't want to have to do yourself. So, for instance, I have fair value gap indicators that will map out fair value gaps for me. I have high and low indicators that'll map out previous range high and lows. I'll also have indicators that'll map out sessions, so it'll cut Asian session, London session, and New York session all on the chart for me. So I can, obviously we could tell which one we're in, but it just helps kind of keep everything smooth. Next, we have Judah swing. You're going to hear this a lot. Judah swing is a false price move by smart money to run stops and lure street money to the wrong side of the market. So usually you would see this most of the time at market open. You know, the makers will send, let's say for instance, they will send the price up to then sweep out orders that usually most people won't be able to see. So they'll send them market up, expecting people to buy it, follow them, and then obviously with it being the Judah swing, the fake swing, that's just to run on stops and then come back down and sweep all of them out. Next we have kill zone. It's 1 out of 4 high probability time periods, typically 2 hours each, in which to find trade setups. So London kill zone is 10 to 11. That's silver bullet, and there's a few, but that's really the most popular one. I'm sorry, London kill zone is not 10 to 11. That's New York. London kill zone is 4 to 6, and then London open is 8 a.m. London time, which I believe for us is, I want to say 12. London open kill zones normally 7. I wouldn't pay too much attention to this. This will be for what we use later if we do decide to trade in London sessions. But as of right now, we only stick to New York sessions because nobody's really up at 3 or 4 in the morning regardless. So New York open is 8 a.m. local time. So for us, for you guys, the majority would be probably Central time. So that would be 9:30 for you guys. For me, it's 7:30 because I'm in Mountain time. And now, New York open kill zone is normally 7 to 9 a.m. Again, disregard this. There's different kill zones for kind of different models that people would use. Disregard the pivots. I'm going to go ahead and take that off. New York session is 8 a.m. to 5 p.m. That is obviously when you hear the stock market bell ring on Wall Street, and then when you hear it close at 3. That is basically the whole New York session. Next, we have NFP. NFP is a red folder event, non-farm payroll. It's a news release, economic release that basically has a big influence on the market. Something about payroll, whatever. I don't pay too much attention to it. I just know that it's a red folder release. So whenever it comes out, I usually try and stay out of the markets until it is complete because price can get a little bit hectic. OBOS is overbought or oversold. Again, we don't really use that. We have different kind of mindsets on overbought and oversold than most retail people do. Most retail think that the market is overbought. Too many people are buying. We need a retracement. But for us, it would be more of, it could be something with fib levels. We're overbought on a fib level. And we need some sort of retracement to come back down and then go back higher. Next, we have one shot, one kill. That's an ICT sniper tactic. Instead of, buying and selling, buying and selling, buying and selling, basically just wait for one A plus 100% setup. Not 100%, probably 90. And you just take that. And if it works, it works. If it doesn't, it doesn't. Seasonal tendencies. So this is something you'll hear him talk about very frequently. Seasonal tendencies. Obviously, the market follows tendencies. Certain months will perform better in certain, aspects as far as crypto goes, gold, cattle, wheat, whatever. Even the indices will follow some sort of tendency. So it's another confluence you can kind of add to your trades. Next, we have seek and destroy. It's a smart money tactic. Basically, seek and destroys will have multiple drawn liquidity points, and that's highs or lows. So you'll see a high be swept, and then you'll see a low be swept, and then a high be swept, and then a low. So basically, it's just knocking out both buyers and sellers, so nobody can really be profitable. So seek and destroy conditions are the number one thing we are really told to stay away from. So when you kind of see, just bad. And I'll show you an example real quick right here. So this would be a good seek and destroy example. So here we have high, low, high, low, high, low, high. So it's not really making any significant price movement until obviously, after lunch. But this morning session would have just been absolute hell to trade, right? We have a high, then we have a low, and then a high, and then a low, and then a high, and then a low, and then a high. So it's just not an ideal situation to be in. Next, we have take profit, which is the price level which a resting order has been placed to close the position. Pretty straightforward. Next, we have turtle soup, a smart money trade placed counter to a typical turtle trade, anticipating the failure. So a turtle soup would almost be like if we were to kind of run up and buy stops, and then it doesn't quite really get there, and then comes back down. And then the last two, we have SPX and NQ. Those are both just trading symbols. So these are a few of the terms that ICT you'll hear him mention in videos and whatnot. And obviously just by watching him, you'll pick up on certain things. But I'll post this in the Discord just so you guys have this if you need it.